Hi there, welcome to Kneppy Invest. In today's or this week's technical update video, it's a little bit more of a personal touch because most of the charts I will be showing you today are of companies I have in one of my portfolios. So the first thing I'm going to do in today's video is actually show you how my portfolios are performing. We'll also talk about the differences in the three portfolios I am tracking right now, and also touch upon my latest project, which is an hourly trading strategy. I'll talk about how that has been performing in the first 3 weeks of the financial year. So before we start looking at some charts, let's have a look at how my portfolios are performing. Before we have a look at the hourly strategy, let's go back and have a look at my long-term portfolio. Now, first thing I should mention is I have three portfolios. My long-term portfolio ideally is companies that I want to own for the long term. And ideally, these are companies that are high quality. At this point in time, not all the companies I own in this portfolio I would consider high quality. So there is a possibility I will trade some of these companies out or even transfer some of these companies more to my trading portfolios. And at this point in time, the long-term portfolio is up 2.4% compared to the benchmark, which is only up 1.7%. And because I do own international companies, there is a currency gain here. That's actually negative. So if I just look at the capital gain, it's almost double the benchmark. And that's my ultimate aim, is to double the benchmark. The other thing I should mention is there are quite a few companies I do own that don't fit into any of my portfolios. These are the sort of companies that eventually I probably want to sell out because they don't fit into my current strategies. Some of these companies I've held for a few years, and I've just realized I don't know why I'm holding. And that's what I've decided is to every single company I own, I need a justification behind or reason behind why I'm owning it. And if there's no reason, then eventually I will sell out of those companies. So at this point in time, long-term portfolio up 2.4% compared to the market, or benchmark up 1.7%. Now let's have a look at my trading portfolios. Now, over the past 3 years, my trading portfolios have outperformed my long-term portfolio. Now, you'll hear a lot of experts say you should not trade the market. You don't make money by trading the market. I'm changing my opinion on that, significantly changing my opinion, that I do think you have to be a little bit more active. So in my long-term portfolio, I'm not as active. And I'm just looking for those high-quality companies. That's what I'm doing right now, looking for high-quality companies that I just want to own for the long term. Now, once I turn my attention to my trading portfolios, and the reason I have two trading portfolios is because I've subtly shifted the way I'm trading, very subtly. In fact, I'm writing down rules, developing rules that I'm going to try to follow almost 100%. And I believe that if you do have rules and you're able to follow those rules, then you should significantly outperform the market. So my legacy trading strategy, I've just called it trading. Now, my legacy trading strategy was just looking at daily charts, moving averages, that sort of thing. I wasn't that active on a daily basis. I was just finding companies that were moving to a nice uptrend. I didn't look at the market I didn't look at the market during the trading day. I did look at the market every single day. Now, at this point in time, I don't have many companies in this trading strategy, about 15 or so. But it is up 5.7% compared to the market or the benchmark 1.6. I'm not sure why the benchmark for this is a little bit different than the long term. It should be exactly the same. Now, the best performing companies in this strategy are IPD Group, Doug, and Duratec. I'm going to show you the charts for these companies. And these companies have been best performing companies in all of my portfolios over the past year or so. Now, I did buy IPD Group just after it IPO'd, after I think they released a profit upgrade, and it has by far outperformed the market. And it is one of my largest holdings right now because I am not selling. The share price, you'll see that when we look at the chart. Share price is a beautiful uptrend. And now I am starting to hear a little bit of chatter about this company. So I listened to every single AusBiz call. Never heard about this company up until probably the last month or so. And I've heard now about 2 or 3 episodes where IPD Group has been brought up. Doug has been done really well for me. Duratec as well. Now, the other thing I should also mention is there are a few companies in this particular portfolio that I could see transitioning into my long-term portfolio. And that is the ultimate goal, to buy into a lower quality company, hold that company for a few years, maybe 5 years or so, as the share price goes up and up. And then finally, you can look at that company and say, it's a high quality company. And because it's a high quality company, I'm more willing to hold it for the long term. So hopefully that's what's going to happen for IPD Group. There's another company here called Johns Lyng Group, which I initially bought just because the share price was in an uptrend. Share price has really done nothing over the past few years. And I think maybe that company belongs in my my long-term portfolio. But hopefully IPD Group falls into that category. I have not taken any profits in that company. And you already see why when we look at the chart. Now, the worst performing companies in this particular portfolio, Cryo, this is from the start of the financial year. I'm still significantly up on Cryoso Corp. Boss Energy, I just took a trade in that. I'm a little bit down on Boss Energy and possibly selling out of that position. And Ventia Group, Codan has been a beautiful uptrend, but we did see a couple of negative days for that company. That's why it's down a little bit. But overall, really happy with the performance of this portfolio. But really, the reason this portfolio has outshone the market is because of IPD Group, Doug, and Duratech. Also have Tyro Payments. So you might notice that Tyro Payments is in this portfolio. It's also in my hourly portfolio. So I've actually taken 2 positions in that company. So doing really well with the trading strategy. It's up about 3.5 times the benchmark. Now let's have a look at my hourly strategy. So I've been doing this since the start of the financial year, and I strategically timed it to start this strategy at the start of the financial year. And at this point in time, this portfolio is up 7.65% versus the benchmark 1.63%. So we are talking about almost 5 times the benchmark. Now, only 3 months or 3 weeks into the financial year. I doubt we'll see the performance of the hourly portfolio continue this significant outperformance of the market. Now, I am way more active in this portfolio. And to be frank with you, I don't mind doing this. I don't mind being a little bit more active during the day. And because I'm a little bit more active, I will take profits pretty quickly, which I've done with Mesoblast in the electro-optic system. Both those companies were up about 25% when I took profits. So that's my ultimate goal, is to take profits when a company is up 20 to 30%. But not always. That's the other thing I want to make clear. In fact, Kogan was up about 22, 23%. I was thinking about taking profits. Then I looked at the chart and went, I think there is further to run, or possible further to run for that company. So most of the companies are in the black in this portfolio. A few companies in the red slightly, including Integrated Research and Bravura. In fact, Integrated Research is right on my stop loss. So slight differences in this portfolio. I do have stop losses for companies I am trading in the hourly strategy. Don't have stop losses when I have companies in my trading, my legacy trading strategy. Now, I am also have a journal, an hourly trade journal, and I am using, what's it called? Stocks. So convert to stocks. I forget what it's called, but this is in Excel. So all I have to do is put in the ticker code Mesoblast, and then it'll show me the price. So I don't have to update the price and change because that's automatically updated by whatever this is, stocks. I forget what it's called in Excel. What do you call it? No, I forget what you even call it. Anyway, so then in the other columns, I have the price I bought in, units I bought, the change from when I bought. I also have a stop loss, my initial stop loss, which I don't change, and a stop loss buffer. And then I have a sell section here. So I've already sold out of Mesoblast in electro-optics. So Mesoblast up 28%, electro-optics up 26%. So Kogan currently up 19.6%, Megaport up 13.5%. Genus Plus up 9.6, Downer up 8.9, Tyro up 8.5, and then a few negatives. And typically, I don't want any of the losses to be more than 10%. Ideally, not more than 5%. So that's the ultimate aim of this portfolio, or this strategy, is to limit your losses and ride your winners to 20, 30, possibly even more than 30%. So at this point in time, I have not sold out of any of my positions, but I'm very close when it comes to integrated research. In fact, it's right on my stop loss, 0. So we'll see if I sell out of integrated research if it drops 0.5%. Now let's have a look at some charts. And I'll show you why I've taken in positions in some of these companies for the short term. And I'll also try to show you or tell you my confidence levels in some of the positions. Now, the SGO going sideways. A lot of volatility the last few weeks, but still the XGO is going sideways. If you listen to Ausbiz The Core, they're quite bullish. Quite a few of those commentators are very bullish, saying we're in the bull market, we're in an uptrend. The XGO is not in an uptrend. They're more thinking about the NASDAQ, which is, or has been in a beautiful uptrend, is still an uptrend, even after 2 down days. A fairly big down day on the Thursday, down 2.3%, mainly driven by Tesla and Netflix. And so let's have a look at my 1-hour trades portfolio. And the first company we're going to look at is Kogan. Now, the whole reason I'm doing this is, or what I'm using is 1-hourly charts, but I'll also show you the daily charts as well. So if you just look at Kogan's 1-hourly chart, this is a beautiful uptrend. It broke through a little resistance level at about $4.75. It tested it twice in about a 1-month period. So you just see it going above it. And the 19th of June, beautiful, about 6 hours in a row, just went straight through, and it's tested it twice. And because those tests were, in a way, failed because the share price didn't fall through it, share price has moved up. And it's sort of really accelerated in the last week or so, and now has gone sideways for the last 3 trading days. I've pulled up my stop loss. So it was way lower than it was. In fact, when I first bought in, my stop loss for this company was down about $4.60. Now it's up to $5.50. I really like to see the share price of this company get well above $6.30. But the reason why I'm more willing to hold on to Kogan shares for the longer term, so instead of just a short term, but a medium term, why I'm not totally willing to take profits just because it's up 20%, is because of the daily chart. And this is a beautiful breakout. So you can see that fairly strong resistance level at $4.75. The reason that was a resistance level is just look at the highs we saw back in August last year. Share price took off, got to this level, and then pulled back. We saw the same thing in February this year. Share price got to $4.75 and then pulled back. So we wanted to see a breakout above that level. Very important. Resistance and support levels actually do work because of the psychology of individual investors and the market as a whole. So actually this chart is looking really bullish, this daily chart. Very bullish chart. I think sentiment has significantly shifted when it comes to Kogan, and the trend in the share price has gone up. So this is a sort of situation where I'm more willing to hold for the longer term, so not just a short-term trade. Now onto Tyro. Not quite as confident when it comes to Tyro. So let's start with the hourly chart. But when you look at the hourly chart, this is a nice little hourly uptrend. And I've actually have increased my stop loss in this company. So if the share price does fall to $1.25, I will take profits. So I bought in $1.20, if I remember correctly. This little pullback, I think it was, something like that. I forget exactly when it was. Nice little pullback. And we've seen another little pullback. And the last hour of trading on Friday, share price actually did increase 1.5%. So we did see that pretty good downtrend. I think there was a takeover bid for this company, and then it fell through or something, or whoever was trying to take over said, no, we don't want to proceed. That's why the share price absolutely collapsed all the way down to about 92.5 cents. So the reason I'm not as bullish on Tyro as Kogan is just because of the daily chart. You can see share price dipped and sort of like a V-shaped recovery. So wouldn't be surprised to see the share price really struggle, particularly once it gets above $1.45, because a lot of people bought in around $1.50, as high as $1.80 between September last year and May of this year. So a lot of resistance moving forward for Tyro payments. Now to Genus Plus. Now, one of the things I was talking about in last week's video is I probably should have a liquidity rule in my rule things, whatever you want to call it, for my hourly trading strategy. And the reason behind that is sometimes I might want to get in and out fairly quickly. And Genus Plus may not have be successful in that liquidity rule, but I still took a position in this company because of a nice uptrend developing in the hourly chart, and also because of a beautiful uptrend developing in the daily chart as well. And it's moved through a resistance level at $1.05, and then I took a position a few days later. So nice uptrend developing in Genus Plus, sort of an infrastructure company, but still you can see share price was significantly higher during 2022. So a bit of resistance moving forward for the company. Ideally, you want to buy in a company that is at all-time highs, because that means there's no resistance. And I'll show you some examples of that later in the video. Now onto Downer. This is another possible longer-term trade. A lot of sentiment, or the sentiment in this company is shifting from negative to positive. In fact, in the last Ausbiz the Core episode I just listened to, there was two of the commentators were really bullish on this company. In fact, one of the commentators called Downer a bad quality company, but you still can make money out of bad quality companies. You just don't want to own them for the long term. So looking at the 1 hourly chart, this is a beautiful uptrend in the 1 hourly. You can see acceleration in the share price moving up since the end of June. And I've actually also increased my stop loss in this company. And if you look at the daily chart looks like it's breaking out as well. Although the last time the share price was this high was like December of last year. So only about a 7-8 month high. And the share price, when you look at the daily chart, was in a pretty good downtrend up until the last few weeks. So keep an eye on Downer, but share price and sentiment in this company have shifted positively over the past few months. Megaport, pretty sure I did a video on this company. The company did release a fairly bullish report. If we look at the 1 hourly chart, and the only reason I took a position, short-term position in Megaport, was simply because of that particular announcement. In fact, some of my rules might pertain to announcements, that if a company releases a really positive announcement, that is going to lead to me having more confidence in the trade. And I took a position in Megaport at $8. What was it? $8.70. So right here. So it would have been a few hours after they released the announcement. So I would have missed it. I would have bought on breakout in the first hour. I would have bought on the breakout at midday on the 11th of July. You can just see the share price breaking out, and the share price kept going up. Share price has found some resistance at around about $9.60 to $10. The reason why it's found a little bit of resistance at that level is if we go all the way back to August 2022, share price did get to a high of almost $10. So there's a little bit of resistance at this level. If the share price gets above $10 on strength, that will be very bullish. So if we look at the daily chart, you can see why that would be bullish. That was the old highs we saw again in August. And if we get above $10, that means the share price would be at least a 1-year high. And a lot more to go if the share price gets up to its record high, which was $22 back in November 2021. So this is definitely a short-term trade, but if the share price keeps going up, why not hold it for as long as it keeps going up? Even if it gets into my 20 to 30% sell range, if it goes to up 40%, so I'm willing to hold for a little bit longer. Now onto a company that may be my first sell. I thought I released a fairly positive announcement the other day, and the share price did respond, but a little bit of selling. I think it was a fund manager getting out. You can see that in the volume spikes. So there's like 5-6 volume spikes, and that was a fund manager just dumping on market. And whenever they dumped on market, the share price actually collapsed about 2.5 cents. And that's why the share price has struggled. And it has hit my stop loss right on 42 cents. The reason I've got a stop loss at 42 cents, when I say stop loss, I'm not going to immediately sell when the share price gets to 42 cents. I need to see 42 cents broken on strength before I sell out, because the last high we saw back in May was 42 cents. But I do have a longer term position in this company simply because I think there is some value in this company, particularly if they turn it around. Fairly similar to Gentrack, Now, the problem with Gentrack is I took a position in that company about 2 or 3 years before the share price finally broke out, and the company proved to me they were turning things around, and I still own Gentrack right now, although I have taken some profits. So I can definitely see, and you can see this by looking at the daily chart. Share price has dropped from almost $5 in late 2020 all the way down to 40 cents. So if this company can turn things around, there is potential, really good potential. And the other thing I'm fairly confident is I think the bottom has been reached. And that bottom is around about 32 cents or so. And that's when I actually did take a position for the longer term, thinking maybe the bottom has been reached. But I'm also willing to trade this company. So I think the bottom has been reached. And right now, we might be in a consolidation phase for this company. And the company actually does release a fairly bullish announcement, particularly when it comes to financial state. I think the share price could take off. Now, A2 Milk, not sure why I took a shorter term position in this company because, the chart doesn't, I'm not that confident in this trade. I bought in at $5.10. Current share price it was $5.10. We can always check. $5.14. Share price $5.09. The reason I took a position at 514 is because it went above 510 here. So it looks like it was trying to move into sort of an uptrend, short-term uptrend with a higher high, higher low, but it is struggling over the past few days. And if I see the share price go sideways, I will just sell out of my short-term trading position in A2 Milk, still hold a longer-term position in that company. Collins Ferd, this is just back on the back of a positive announcement. You can just see the share price taking off on the 27th of June, and the share price keeps on going up. Stop loss 95 cents or $9.50. I think I bought about $10. So if the share price does fall below $9.50, my loss out of that trade would be around about, it's less, about 5%, not much at all. RPM Global, this is another positive announcement, nice little breakout above a resistance level at $1.50. You can see why that's a resistance level. Just look at the chart. Share price was really struggling to get above that level. And then all of a sudden, when they released this positive announcement, share price increased 9.8%. And you can just see the lows on these 5 consecutive hourly periods. The low was $1.50. Trading or technical analysis does work, particularly resistance support levels. And the share price took off. Now, I did not take a position in this company at this point in time. Now, when I saw a little bit of a pullback, that's when I took a position. And I bought in RPM Global at $1.59.5, which is right there. So this was a really good time trade. And I only took a position in this company because I did see that pullback and I did have a buying price at $1.60. It actually fell below that. And then the share price took off. And then share price has pulled back again. So what we want to see now is the share price take off again. Okay. Our MMA offshore, I did have a long-term position in this company. When I say long-term, more than a 1-year position, and it was only a trading position. And then I took profits. The main reason I took profits, this was quite a few days ago, quite a few weeks ago, is because the share price was just going sideways. So I think the share price really took off on the 19th of December, and you can see the share price went sideways for about 3 weeks, and then it took off again. So I just decided to take profits because the share price had more than doubled from when I bought in. And then the company released another positive announcement the other day, and I went, I'll just take another position in this company because one of the problems a lot of investors have is when they sell a position, they're not willing to buy it back in, even the share price is a little bit higher. And the share price actually did rise from when I sold out of MMA offshore, and the share price has gone sideways, which is not bad when you look at the round chart. That means there's not much selling. And I wouldn't be surprised to see the share price take off in the next few weeks for MMA offshore. Bought in at $1.25, so share price has virtually gone sideways from when I bought. Now, Mount Gibson, possibly this should be in my longer term portfolio, simply because I think there's a lot of value for this company. I do own Phoenix Resources, and I am thinking of selling out of my Phoenix Resource position, and just have Mount Gibson as my iron ore play. They did release their quarterly update. It was fairly positive, but a little bit of selling has come in after the release of that announcement. I bought in at 48 cents, I think it was. So down here, 48 cents, with a little bit of pullback in the share price. The share price has decreased a little bit more than when I bought, 46.5 cents. But the share price has moved into my support level, which is that green area. So I'd like to see a little bit of a bounce from here. If we didn't have this little rally in the share price back in June, I'd be more confident the share price might take off from here. But there's a little bit of resistance because of those shareholders who bought back in June, who have now had the opportunity to stay out of this dog stock. So don't forget, when shareholders buy, when I say shareholders, I mean the majority of investors buy companies, stock or shares. They want the share price to go up straight away. If the share price falls, they automatically call that company a dog stock. I see this time and time again. Bravura, we saw a nice little rally in Bravura's share price on the 5th of July. I thought that might have been a breakout because the share price, look at that. Share price just gradually going up very, very slowly. Share price took off. We saw a little bit of a retraction in the share price and then took off again, another retraction. But I bought in at 50 cents, I think. Bravura, 52 cents. So a little bit higher than it is now. I think I bought on the initial pullback here, but I'm willing to hold this a little bit more because I think there is value in this company. Another turnaround, possible turnaround story. And the share price is in an uptrend. You can see that uptrend in the daily chart. Well, in the daily chart, it's not an uptrend, but definitely 1 hour charts in an uptrend. Email payments. So this is interesting. So I have a longer term position in this company, and now I'm willing to trade this company. Now, the time to buy email payments was not when I bought it. It was actually here on the 12th of July. I was not really following email payments at this point in time. You can see the share price just took off on that day. Huge volume coming in as well. Went through a resistance level at 72.5 cents and then hit another resistance level at 83 cents. You can see how much it had trouble getting through that level and then pulled up, broke through that level and has taken off again. So I took a position in email payments for the longer term. And if you look at the daily chart looks pretty enticing as well. So last time share price was this high was way back in September of last year. So not quite a 1 year high, but I think the low has been reached for email payments. And that low was around about 40 cents, double bottom for email payments. And the other one, Nuix, and this is just based off a really good trading update from the company. Looks like, what do you call this? A wedge, a bullish wedge or pennant. Pick out what you call it. So you can draw it, just draw in lines here. Whoops. So it looks like, yeah, a bullish pennant. And I would expect if the share price breaks above that top line here, share price will go up higher. So I think there is also some value in Nuix. And I did take a position. Took me a while to take a position in this company. I took a position at, what was it, $1.08. So it would have been, yeah, when it touched the bottom of the pennant. That's when I took a position. Originally, I did have a position at $1.05 and I've got very close. I didn't put that bid in on the first hour. Got very close on the start of trading on the Friday. In fact, the share price got to $1.06. So I just missed my buy and then I put it up to $1.08. So that's my 1 hour trades right now. Now let's have a look at some of my longer term trades, starting with ServiceStream. So I bought ServiceStream before the start of July. So that's why this company is in my other portfolio, but I am still using my 1 hourly trade rules for this company. And you can see why just by looking at the daily chart. I probably should look at the daily charts for these. Why I took a position in this company should be fairly obvious. And that's, so I took a position in this company 8th of June when it broke out on really strong, good volume. Share price up 8.7%. Share price kept going up and there was a little pullback in the share price. I was thinking possibly of taking profits in this company on this little pullback on the 17th of July. The share price hit this nice little support level and then rebounded. So sometimes, well, one thing I'm learning is don't be too hasty in taking profits. Just wait to see what happens because then the share price has taken off and then the company released some good news on Friday. That's why the share price increased 7.3% and it looks really good right now on the hourly chart and also the daily chart looks really good as well. And I wouldn't be surprised to see the share price of this company get up to about $1.05 and try to test this old resistance level. That resistance level is there because of highs we saw in March. So let's see. If the share price gets to that level, I would not be hesitant taking profits in this low quality company. This is a low quality company without doubt. Now on to, I don't have IPD. Yes, I do. Now to some of my longer term holds in my trading strategy, starting with IPD Group, which has a ticker code IPG because IPD ticker code is taken by Appendix. And this is the hourly daily chart. So I took a position in this company at about $1, and I think it was $1.50. This is way back in, should say way back. We're talking about the middle of 2022. So we're talking about just over 1 year ago. So this is the definition of a beautiful uptrend chart. No reason to take any profit when you see a chart like this. Now, you might have been a little bit nervous back in start of 2023. You can just see the share price did pull back a little bit, but the share price has taken off again. And the share price keeps getting to all-time highs. Not even sure what the market cap of this company is, $411 million. They have a dividend, price to earnings ratio of 27.6. I can envisage this company continue releasing profit upgrades. They made a small acquisition, company definitely to like. And the funny thing is, one of the reasons I took a position in this company is because they did release a positive announcement. And the only way I am going to buy into a IPO within the first 6 months is if they release a profit upgrade, that sort of announcement. The majority of IPOs fall in share price in the first 6 months. This is particularly true in the last 2 years. IPD Group is one of the exceptions, and that's one of the reasons I took a position, just because of the strength of the chart. And that's why, and not only chart, but also because of the strength of their announcements. That's why the share price has increased from almost $1 to a current share price of $4.76. So this is almost a 5-bagger from IPO. Now on to Duratech. So the next few charts, I'm going to show you a beautiful turnaround or shift in sentiment, shift in trends in the share price, exactly what you will see time and time again. The only reason I took a position in Duratech is because of a shift in trend in the share price and a shift in sentiment. And that was in November of last year. So before that, the share price was actually in a downtrend from IPO. Another recent IPO, late November 2020, and the share price fell a fair bit in the first year they were a listed entity. And then the sentiment in this company just shifted. It took a while. You can just see the share price going sideways for well over a year, about 18 months. And then the breakout happened in November last year. And a beautiful breakout in the share price, and that's why I took a position on the 7th of November. And ever since that breakout, share price has gone up. So I took a position in Duratech at about 50 cents. Share price is currently $1.20. So it has more than doubled since I took a position. And this is, just like IPD Group, a beautiful uptrend. And one of the reasons why I'm going to be hesitant about selling companies that are on a beautiful daily uptrends is because if I just had an hourly rule, you just see I might have sold out of Duratech back in May. You can see share price actually dropped from $1.08 back down to less than 90 cents for a brief period. So I might have been a little bit nervous in my hourly strategy and might have sold out of Duratech, and that would have been a mistake. So whenever I see a company in a beautiful uptrend, I'm not going to be taking profits if I see the share price pull back a little bit on the hourly chart, because if you look at the daily chart, share price just pulled back into the support zone, which is that green area. Whenever you see a dip into the green zone, that is a buying in price. Add to your position, that sort of thing. So a beautiful chart for Duratech. And another thing is, just like IPD Group, I'm starting to hear more and more chatter around this company, which tells me there are fund managers becoming interested in this company. And it's fund managers who are the ultimate drivers of the share price going higher and higher. And over time, because this company has been listed that long, over time, those fund managers who don't really want to invest in recent IPOs, we become more interested as this company wouldn't say matures, but as this company gains more time or gets more time as a listed entity on the ASX. Those fund managers become interested in those companies. And that's what's going to drive these companies' share price higher and higher. and that's should also mention that's allowing for financial expansion. These companies have to keep growing. That's very important. Fund managers won't become interested in these companies if they don't continue to grow. The other company, which I have a little bit less confidence is Doug. And I took a little bit more time taking position in this company. Another recent IPO. This company IPO'd in late 2020, just like Duratec. You just see the share price dove, just fell off a cliff in 2021. Share price fell all the way down to about 35 cents. But things have changed. Things have turned around for this company. Much better financial. They've cash flow positive, that sort of thing. Profitable. Don't think they have dividends. No dividends. Market cap $182 million. But the most important thing is we've seen a massive expansion or acceleration in share price the last few weeks. In fact, the share price has gone from about $1.10 up to $1.54. More importantly, the share price of this company could be, it's now an all-time high. So when it was an all-time the past all-time high, the previous all-time high was just after it listed. And now it's an all-time high. So there should be literally no resistance for this company. So those who bought in at the IPO or near the IPO are now in profit for this company. And more than likely, they've already sold out because they saw the share price rising and they went, well, I'm more willing to take a little bit of a loss in this company. It's a dog stock. I held this company from $1.50 all the way down to 35 cents. I'm just going to sell now, even though it's at a loss. And now they're looking at the chart going and the share price going, why did I sell out? And there's a possibility they might buy back in. Who knows? So I've held these companies for about a year. I think Doug for about 8 months. And I've recently bought into Catapult. And look at this chart. It is starting to look fairly similar than these other companies. Now, Catapult has been around for much longer. And you can just see the volatility in the share price. In fact, if we look at the weekly chart, the share price of this company has been really volatile. This was a beautiful company, a cult stock on the ASX back in 2015. Share price of this company went from about 50 cents up to $4.25 in about 16 months or so. And then the share price just fell all the way back down to 62.5 cents. And if you just see a trading range like this, so when the share price of this company gets to 62.5 cents, you buy. When the share price gets up to $2.25, you sell. So that is sort of the target I am looking for. But I think this company is much better placed. And the main reason I bought in this company is the downtrend has come to an end. The share price is going up. We saw a nice little acceleration in the share price back in start of June. Share price went from 73 cents up to $1.06. Then a pullback, and the share price has taken off again. So these pullbacks is something I always look forward to. Sometimes they don't happen. In fact, Catapult's pullback was much longer than I anticipated. In fact, it went all the way down to 85 cents. I bought in somewhere here, I forget exactly where, when the pullback started, and I just was a little bit too impatient, I suppose, but the share price has taken off again. So that's the sort of thing I am looking for when I look at daily charts. And then if you look at the hourly chart for Catapult, it looks really good, although you might get nervous here. So I like to look at both in combination, hourly chart and daily charts. Another one is Phineas Corporation. Again, I took a position in this company based off an announcement from the company and the daily chart. Now, I premeditated, what that word is, this company share price breaking above $2.20. I took a position in this company at about $2 on this day here, 16th of June. Maybe it was the next day, 17th of June or 19th of June, because of a really good announcement from the company, and the share price kept going up. I was a little bit wary because of the resistance of those shareholders who bought back in February, and there was a bit of a resistance level at about $2.20. You can see the share price of Phineas has struggled to get above $2.20. It took about 2 weeks, and now the share price has gone above that level. We saw a test on the 20th of July, nice buying coming in, and the share price now is at long-term highs. We're talking about a 1-year high for Phineas, 1 hourly chart. Beautiful, nice uptrend in the 1 hourly chart. And you can see that test. It was a 1 hour test. At 10 a.m. on the 20th of July, share price fell 5.6% in 1 hour and then rebounded almost immediately in next few hours. SG Fleet, I've held this for a longer period of time. I'm just waiting for this share price to take off. And the reason I'm waiting, in fact, I'll show you McMillan Shakespeare because they're in the same sector. In fact, we'll look at the daily chart for McMillan. I didn't take a position in McMillan. I probably should have taken a position in McMillan because the share price is in a beautiful uptrend, has broken through a resistance level as well. So I thought, well, since SG Fleet is in the same sector, we should see the same sort of things happening with their chart. Not quite true. Share price, although promising what's been happening the last few trading days, is still in a downtrend. So that downtrend is this sloping down line. I need to see this downtrend line broken. Still hasn't broken out, but if you do look at the daily chart, it's starting to look more promising. Also has to get above this little resistance level right there, the last highs we saw, and the 1 hour chart looks okay too. Right on the share price at the end of closing, right on that old resistance level, that old highs we saw, and there was a little bit of selling in the last hour. I'm actually willing to sell out of SG Fleet and just take profits right now. Even though this was a longer term idea, just because of this thematic with McMillan Shakespeare. So McMillan Shakespeare has broken above that resistance level and it looks pretty good as well. I would assume McMillan Shakespeare might be at all-time highs. You can see that's a really strong resistance level. So this is a weekly chart. And that first time it reached $18 was just before those possible regulatory reforms in this sector back in 2013 when the share price fell, was it something like 36% in 1 week, most of that in 1 day. And then you can just see share price of this company has really struggled to get above $18. And in the past week, it's got above $18. Whether it remains above $18 remains to be seen. So that's the reason why I'm now following McMillan Shakespeare a little bit closely, or more closely, because it's at an all-time high. Smart Group is another company in this sector. So I actually have 2 positions, SG Fleet and Smart Group. Maybe I should have a 3rd position in McMillan Shakespeare. And if we look at the daily chart, you can see why I've taken a position in this company. So share price has really moved into a beautiful 1 day or a daily uptrend. That's right, yeah. So if the share price falls below $8.20, so about $8, I will take profits. So when I got a sell there, that doesn't mean that's a sell. Probably should put the sell about there. I was thinking, see this little dip in the share price? And you can see that in the 1 hourly chart. Because I'm now using my 1 hourly rules for these companies. When we saw this little dip, I was thinking, oh, this is looking dicey. And the share price fell through this level at $7.60 in 1 hour, but then rebounded. Share price rebounded really quickly. And this is one of the reasons why I don't have physical stop losses, because my stop loss might have been hit for Smart Group, which I would be ruining right now because the share price has gone from $7.60 to $8.60 in about a week, 2 weeks. So I just have stop losses, and then if I see the share price struggle to get back above that stop loss, that's when I sell. Smart Group didn't struggle. It fell through for a very brief period of time and then just rebounded beautifully. So that's all the companies that I have in my longer term trading portfolio that I want to show you. Now to some companies that I am following and looking at. The first one is, you might be surprised, is Platinum Asset. The reason I'm following this one is because where the share price is right now compared to a really strong support level. So you can see that strong support level when you look at the daily chart. Share price has hit about $1.60 back in June, July, also September. Saw a nice little round in the share price, and it's pulled all the way back down to $1.60 and is struggling. You just see it struggling to get below $1.60. So technical analysis does work. The problem is there's no strength there either. The share price hasn't rebounded as well we have seen in the past. So that makes me think the share price might fall below this resistance level, which would be really bearish And if you look at the 1 hourly chart, share price has just been going sideways. Not a lot of volume either, so no one is interested in this company. This could be almost the all-time low. So we are talking about an all-time low for this company's share price. And this company goes all the way back to 2007. All-time high for this company is $9.50, so well off the all-time highs. On the flip side, we have Navigator Global Investments. The share price of this company got as high as $6.25 back in 2018, and the share price moved into really long-term downtrend. But there are signs of life. Signs of life. See, there was a nice little resistance level at $1.31. That was the previous highs back in February of this year. Share price struggled to get above that level. And then look at what happened the last 2 trading days. Share price up 7.5% and 5.8% on really good volume. This is a definition of a breakout, and I missed it. I wasn't really paying that close attention to this company. You can see this on the hourly chart, share price going sideways, and then it broke out on strength. So I've put that onto my watch list. If I see the share price pull back to, say, $1.35, I might think about taking a position in Navigator Global Investments. I'll just put down $1.35. I don't know much about that company, but I'm pretty sure they are fund managers, something like that. Volpara. This has been a beautiful chart. So sort of a stepwise increase in share price. Downtrend has come to an end. I think it's safe to say that. And it's looking more bullish. They did release their quarterly report the other day. They are operating cash flow positive, probably not free cash flow positive. But the share price has pulled back, did break out, and has pulled back. So again, I like pullbacks. So this is a nice little pullback, and around about 90 cents is a possible buy for Volpara Group because of the pullback. Share price in an uptrend, and now we're seeing the share price pull back. And it's really easy because if I did take a position at 90 cents in Volpara, my stop loss would be 85 cents. I'm just going to put that down, which would be about 5%. And it's pretty easy to see why that would be a stop loss, because there was a breakout in the share price above 85 cents. That was a resistance level. Share price tested 85 cents on the 13th of July and then took off again. So that's why that would be a stop loss. Now, if the share price got to 85 cents, I wouldn't immediately sell. I'll just wait a little bit of time. And there's a lot of algorithms out there. They do know stop losses. They do know where people would put stop losses in. They test it a lot of the times. Sigma is another case of a pullback, which I was following this company. We saw the share price pull back to my level, but I didn't take a position. That's okay. There's a lot of possibilities out there. And the reason why I was waiting for 75 cents to be reached with Sigma, you can see when this company announced that announcement or that deal with Chemist Warehouse, the share price popped up, and the low on that hour was 75 cents. Share price took off. Share price pulled back all the way down to 75 cents on the 17th of July. Look at it. On the first hour of trading on the 17th of July, the low on that hour was 75 cents, and the share price has taken off again. Current share price, 82 cents. So a nice little 10% from that little pullback. Testing of the now support level. The main reason I didn't take a position in Sigma Healthcare is just simply because I missed it. Bank of Queens. And the other thing I'm now learning is in TradingView, you can set up alert systems. That's what I've been doing the last few days, is putting in alerts. And if I do see share price reach, a little thing will pop up, alert pop up onto my phone, and then I maybe can make a trade. Bank of Queensland. So there are quite a few financial stocks that I'm interested in right now. Bank of Queensland looks interesting. The main reason I'll be more interested in Bank of Queensland is because I think the share price could rally a lot. Now, in saying the 1 hourly chart looks pretty good, looks way different. We've seen a higher high, so 2 higher highs and a higher low. But if you look at the daily chart, this is could be just a dead cat bounce. Share price is still in a downtrend. So you do have to be wary about that I am getting different signals when I look at the daily chart compared to the hourly chart. So when I do look at the hourly chart, and if I do make a 1 hourly trade, it more than likely is going to be just for a swing trade, a very short-term swing trade, that sort of thing. Now, a little bit different when it comes to the OFX group. I've been following this company ever since they made a positive announcement on the 23rd of May. And funny enough, if I was following my hourly trading strategy, I would have taken a position in this company without doubt after that announcement. It was positive. And we did see a little bit of pullback, and the next day at around about $1.70, and the share price has kept on going up. So if I took a position, say $1.75, that's up 25, 35 cents. It's a nice gain over a short period of time, and the share price keeps on going up. So last time share price was this high for OFX Group was actually February of, well, this year, so it's not that long ago. This is an instance where the market got it absolutely wrong. I think the market was expecting a downtrend. So I've actually traded this in the past. So let's go back to the past. So this was May 2021. And this is another case where the share price was in a downtrend, share price going sideways. Then I saw a breakout. I think it was positive news, bought at $1.33. We saw the share price pull back. The share price took off. And why did I sell? Because the share price was struggling to go higher, somewhere in there. I forget exactly where. And then the share price went into a downtrend. I think the market was expecting a profit downgrade from this company. They did the complete opposite, and the market was wrong. But still, the share price is struggling to get it back up to those levels we saw towards the end of 2022. So we're talking about $2.90, which would be long-term high. I'm assuming a long-term high. So share price has been much higher than that back in 2014-15. All-time high for this company would be about $3.60. And the last company I'm going to talk about is Frontier Digital. So if you look at the daily chart, share price has been in a long-term downtrend, still in a downtrend. So we have seen a couple of times when the share price has rallied. And if you just looked at or used a 1 hourly trading strategy, you would have might have been successful in the short term, because this rally in June last year, July, share price went from 67 cents to about $1. So you could have made, nice little 20, 30% gain in that short period of time, but you had to time the bottom and time the top. Now, one of the reasons why I'm more interested in this company is more for the longer term. So I'm not sure if I will take a position in this company for the short term. Market cap $200 million. They own online marketplace platforms in emerging markets overseas, Pakistan, those areas. And those online marketplace platforms have significant potential growth in the future. Share price has pulled back a lot, but if we look at the 1 hourly chart, it looks really, really good. Nice little pullback in the last trading day, and I just saw that pullback and went, maybe now's the time to buy. If I see, so apparently I have an alert for this. If the share price falls to 43.5 cents, just take a position. Not necessarily, I don't have to necessarily see the share price get to 43.5 cents, but I could take a position at 45 cents. But if I see share price gets to 43.5 cents, take a position, and easy stop loss if the share price falls below about, we'll say 40 cents or so. So that's potentially my next buy is Frontier Digital, but I would probably prefer to own this company for the longer term. So maybe I should have this company in my long-term potential, even though it's not a high-quality company, even though it's not profitable. I am thinking about the longer term when it comes to this company. So that's all I got for this video today. If you have any questions about any companies I've talked about in today's video, I'd like to hear from you. So leave your questions, your thoughts in the comment section of this video. Otherwise, that's it for today's video. Have a good day. Talk to you later. Bye. And don't forget, I am not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.